Rohr here with an early, concise highlight on Friday, October 31st, 2014. It's Halloween, and certainly some things have gone on to put a fright into the equities bears. And on the macro view, if it's all about the Fed from Wednesday into the trading yesterday, well, today it is all about the Bank of Japan, who put through an additional significant increase to their monetary stimulus program. And that has most heavily affected the equities and to some degree the currencies, of course, especially the yen. So what does all that mean to the markets? Well, the S&P 500 is up $22 overnight. It's trading up currently at about 2010, and it's been up around 2015. Now, what's very important about whether it holds this bid and continues on the upside is that the December contract all-time trading high right after the September contract expired is it bid itself up to about 2012.5. And the lead contract high that occurred just prior to that, going back to the middle of September, was 2013.5. So if it can keep the bid on this gap higher opening, then any follow-through puts it into a new all-time high. And even though this is the short-term view, we're going to include a very quick look at the intermediate-term charts because there are reasons why the next resistance is not until up around 2040 to 2050 to 55, if indeed the market can escape the current highs. And, just as a bit of history on that better than expected GDP number and even some better than expected data elsewhere, early yesterday, overnight, this market was actually trading down around 1962, which was off about $10 on the day. But through the course of the day, the realization the Fed was still more accommodative than not, and the GDP figures were strong, put this market back up. And along the way, as we had mentioned pre-opening yesterday, that the hourly MACD was back below its upper runaway band as of the close on Wednesday. But when you got out into mid-morning on Thursday, it was able to cross back above the upper runaway band and start to reinforce the strength as the market pushed through 1985 high from back on Wednesday prior to the Fed announcement, and that's also one of the key previous resistance areas. So here we are with a market that also, moving over to the intermediate term for that quick look, has the old high, lead contract high, 2013.5, right about the same time that we made the 2012.5, right after the September contract expiration. This is into the Friday following the September contract expiration, 2012.5. And you can see on this chart, if you're at a new high, you have to look at topping lines, which by next week are up to 2055, and oscillator levels, where this is likely to move up to 1,915. The next oscillator resistance above is 125 to 130 over, and that sets you up for a push to 2045, even just to hit the oscillator. So this is all going to be very important into next week as well.